Hello there, my friends. Chris Marcus here with you on Thursday, September 7th. And today, a quick video about how the dollar meltdown is, well, I don't know if we're close to the end, although it's fascinating seeing things that are happening before our eyes here. Talked a little bit yesterday about how the cryptos are in my opinion, signaling people moving out of the dollar into other assets. We also mentioned the dollar index, although it's interesting, there was some news today. Basically, the European Central Bank, that's the Europeans' equivalent of the Fed, which, from everything I've ever read or researched, is quite similar to the Fed. I'm not sure that it's really doing anyone any favors as the idea is projected yet. In either case, the Europeans, at least their central bank was kind enough to be honest and say we're going to go to negative interest rates. Which again, if you've not heard of negative interest rates, and that sounds a little odd to put $100 in the bank and in best case maybe get 99 or 98 back a year later. Don't worry, you're not alone. It's as insane as it sounds. But in either case, Mario Draghi, the chief of the European Central Bank, they had an announcement today where basically saying nothing, kind of like the Fed, but speculating, well, we're thinking about reducing what we're doing. In other words, hypothetically not going to print as much money, which of course for a currency is a good thing. Now I don't know that I'd really rush out and bet the farm that they're going to reduce anything. But still, to the degree that the markets reacted to that, so if you think of it like this, if you have, it can be simple supply and demand. So if you have one currency, or you have two currencies, one they're going to do, where it doesn't even matter what level they're trading at. Let's just say they're 1-to-1. And currency A says, we're just going to do nothing, we're not going to print money. And currency B prints money. Well, relative, currency A will gain in value because its supply is staying the same, whereas currency B is going to be printing more money. So to the dollar and the euro, basically, head of the euro money printer is saying, we're going to rein it in, not going to continue printing as much money, which, as you might expect, the euro has traded, looks like it was up about 1%. And let's see, here on the dollar index is down to 91.50. And to put this into a little context for you, really the big event was around the election where really the narrative that everyone was saying that stocks were going to get hammered and all heck was going to break loose. In fact, the opposite of that happened when Trump was won the election last November. So exactly which day it was, but the first week in November, you have the dollar index trading right around 98. And then by, let's see, what is this, January, it was up to 103, and since then it's just gotten torched. And it's interesting in a sense, not to leave you hanging. So it was at 103, and it's declined steadily. So since January, the dollar again, measured against the euro and a couple of other paper currencies, has gone from 103 down to today. It's at 91.49, so I'm going to ballpark that at slightly over 10%, which again, currencies aren't tech stocks. Currencies aren't supposed to act like cryptocurrencies, although I guess we're seeing a shift in that paradigm. But especially the world's reserve currency, where so many things are priced in, is such a big part, or let me rephrase that, was such a big part of global finance. And again, I know I'm a little bit guilty of this. I'm often very focused on silver and the precious metals, which traditionally have been a good barometer of the dollar. Although, again, you're not seeing an accurate reflection of what's going on because they're manipulated markets. Yet, again, I don't think the dollar index is the greatest way to look at what's happening. But in the context of what's happening with the cryptocurrencies, in the context of what's happening politically in the US, and of course economically, where the government numbers give the impression that we're in a recovery, yet take away all of that printed money, take away the 1% now interest rates, and see then how strong your economy is, thing would crater. That's the whole reason why 8 years, 9 years later, you still have those low interest rates. So it's not like the signs aren't there. And again, does that mean that dollar is going to be confetti tomorrow? I don't know. I guess it's possible. But it's just, again, I know I get focused on gold and silver, but if you leave those aside for a moment and look at these other signs that are happening, and again, you know, it's been a gradual move, or actually, I don't know if you call that gradual, but still, just to wake up today, hear the news that Europeans essentially again said nothing, but I love that term, jawboning, or no, even better is saber rattling. One of my favorite old pieces of Wall Street economic jargon. But just saying, hey, we're going to stop printing money, and you just see the dollar get pounded again, which maybe Steve Mnuchin is happy about since, as we talked about the other day, he advocates a soft dollar policy, basically manipulating the currency so things are cheap enough that foreigners will buy more, which will potentially help exporters a little bit, but for the rest of people, hey, if you want to go abroad or buy anything that isn't made here, your price just went up. And it just went up by another percent today because that's how much the dollar went down. And who knows? Again, it's I tend to feel there will be some sort of smoking gun event at some point where, you know, to me, these things that are happening are fascinating and give you great insight into what's coming, things that are building and developing. Yet we still haven't had that 2007, 2008 style moment where the world really catches notice. I mean, the stock bubble's still going. Everyone's still buying real estate and the prices are flying. So not really a break point, but geez, it sure feels like things are setting up for that sooner rather than later. So again, if you want to take a look at the chart on that, you can just Google in DXY, David X-ray yellow, and you can see that the dollar is not having a very good year. I expect that to continue. And believe it or not, silver was actually up today, broke through $18, which is exciting news. You know, we'll see how that plays out. For the last couple of years, the pattern has been every time it starts to rally a little bit, you see tons of paper selling. That if anyone can support how those short positions can ever be covered without a massive short squeeze resulting in higher prices, please, if you know the answer to that, write in and let me know, because I've been thinking about it for a decade and I can't figure it out. So it'll be interesting to see how these things unfold, but that's today's news. So thanks for tuning in and watching. Hit the subscribe button. We'll see you again tomorrow and keep you posted on everything that's going on. So thanks for watching.